Thank you for joining us for this live Love Your Hood webinar. This is a first for us, so we're so glad to have you all here today. My name is Meredith Johnson, and I'm the visual storyteller here at Love Your Hood, so you'll find me behind the scenes of everything photo, video, and graphic design and social media related. But I'd like to introduce our panelists. First, we have Mark McClung. He is our managing broker at Love Your Hood. He works in just about every aspect of real estate that you can imagine. And he works with clients, but as one of our owners, beside his wife, Jen, he also works to keep Love Your Hood running smoothly. So we have been very grateful to him, especially in this time. Next, we have Mike Oswald. He is currently the Chief of Lending Operations with Ownership Mortgage, managing loan originating and lending operations. Ownership Mortgage is a national mortgage broker with 2 locations in Colorado, as well as offices in a few other states. He has nearly 20 years of experience in mortgage lending, so he's been helping homeowners purchase and refinance their homes since 2001, and we are really grateful to have him here today as a resource. And finally, we have Rhyan Diller, one of our brokers. She joined us here at Love Your Hood after nearly 5 years of real estate experience, just a few weeks before shelter in place was beginning. So she's been such an excellent help to our staff and to our clients as we figured out how to navigate this time. And thank you, Ryan. So thank you all for being here, and I will hand it over to Mark.
Thanks, Meredith. Appreciate it. Hope everybody's doing well. Like she said, this is a first for us, but it's such a fast-moving environment out there. Typically we do statistics and our market updates in arrears. So this update wouldn't come till the 2nd or 3rd week in May, which by then it's old news. It seems like everything's changing daily. So we wanted to kind of dive into what the statistics in the market look like today. And I was up last night really crunching actual numbers. So these are not even 24 hours old. And I did some interpolation on some of the data based on our current trends, the 1st of April through the 23rd, and then kind of projected what the month is going to end up looking like. Obviously, there is a small error margin there, plus or minus 5%, I would say, on some of these numbers. But at the end of the day, it'll kind of paint the picture of what's happening now in Denver County, and probably happening in all the other counties, but all the data is coming from Denver. So those are kind of my little statistical disclosures. And then we're going to jump into it. And like Meredith said, if you have questions as we go over this, please submit those in the Q&A. And also, once we're done, if you want to shoot us a quick email, you can shoot Meredith at loveyourhood.com an email. And we're happy to, I have all these statistics and an outline format for you guys. So don't bother. This is not a testing class. We'll send it to you and you can review it, and feel free to call any one of us afterwards or email us. We'd love to talk to you in person and kind of go over anything that you may still have questions on. So I'm going to jump into it. We're going to kind of move fairly quick, but I'm going to try to paint the best picture I can on the stats. I have about 6 major statistics I want to jump into. I'm going to talk about those and some talking points on each one and how that affects kind of what we're seeing out there on a day-to-day basis. And then I'm going to kind of go into more opinion mode at the end of my little time allotment on if you're in the buy side or the sell side on the residential market, what you can expect, and kind of go from there. So here we go. First stats I kind of want to talk about are active listings. We know what's going on in the current world. I'm not going to get into that. But with active listings right as of last night in Denver County, and this is all residential, we had 1,740. So to put that into perspective, April of last year, we had 2,177. And in the peak of the summer, we had about 2,640 last year. So we're down substantially on our active listings, which is to be expected. Folks are not wanting random people come through their homes when they're having to shelter in place. It makes it hard to go places. And a lot of people too have, you know, when all this started, they withdrew the listings. You know, to kind of put that in perspective, last April of 2019, there were only 8 properties withdrawn from the MLS in the whole month of April in Denver County. And this month we've seen 221. So in the first 23 days, might I add. So that's real data. That's just painting the picture that sellers are withdrawing their properties from the market. They are being conservative. They don't want people through the home, and they are complying with the stay-at-home orders, which is actually really a good thing for everybody. So that's part of it. Also, you know, with that year-over-year decrease of 20%, that's pretty significant. Now's the time when we start ramping up to the spring. We typically see, you know, our low point in December and January on active listings, the number of, and then it just kind of peaks, you know, the June, July, August timeframe, and then slides back down for our season. So that being said, compared to March, we're down 6%. So it has gone down. So there is data pointing that, you know, obviously this is affecting the amount of available properties out there. And like I said, there's 2 main reasons. The first is obviously there's the withdrawn listings that people tried it and said, nope, I'm not selling now. And then there's a ton of people, and we're having conversations with clients that they're just flat out postponing and waiting till the shelter in place is over. So that's kind of summarizes active listings. And now I'm going to move into pending, because this is where we really get into what's affecting the market now. You know, from February, we're down 39% on pendings. And just so everybody understands, pending contracts used to be called under contract. It's basically once you get an offer accepted and you're moving down the road to closing. So our pending contracts are down 39% from February, and year over year, they're down 53%. That's a big drop, and it makes a lot of sense on what's going on. Shelter in place, there's nobody out there touring homes, you know, and it just, you know, 50% it makes a lot of sense on what's going on. But it gets a little interesting as we move along in these statistics. So I want you to kind of just keep that, you know, handy, that statistic handy, because as we move into kind of the median sale price, we're up 8.27% from April of last year. And then from February, we're up 5.86%. So you might be scratching your head thinking, okay, we've got a little less properties available. We have a lot less buyers. Why the heck are prices going up? And, you know, there's still a strong demand for homes. And, you know, we've had a very deep seller's market for a long time now. And even if they turned off the buyers, I mean, if we drop down to 25%, we're still in a seller's market. So we would have to have a ton of new inventory to change that. And I think what we're seeing is there's a little fear-based buying, I'm not gonna lie. People are, you know, there's a lot of people that have to move. There's a lot of people too that are coming out of multifamily apartments that just, they wanna be away from people, which is understandable. So you're seeing a little bit of emotion-based buying. We're still seeing multiple offer situations that honestly are reminiscent of summer of 2018. If there's anybody on here that's actually went through that, they know what I'm talking about. And you're seeing people putting properties under contract without ever going in them. It's usually rare, and it's mostly relocations in a normal market here in Denver, but it's more common with the shelter in place and people still wanting to succeed in purchasing a home. A lot of FaceTime tours. You know, real estate brokers, we're having to reinvent the way we do business, the way we meet new clients via these Zoom meetings and presentations, how to list properties, virtual tours. And I'm not gonna lie, sometimes we pull out the magic 8-ball on some of these questions, because, you know, it changes daily on the data we're receiving on what we can and can't do. in real estate. So a lot of folks are jumping into it now, and they're seeing the writing on the wall. And I'll explain more here in a little bit, kind of on my analogy on, you know, how to navigate the market as a buyer or seller. So jumping into number of new listings, you know, we talked about active listings, like what is active as of last night. So new listings are, you know, what's hit the market this whole month. So if you rewind to April of 2019, there were 1,798 new listings that hit the MLS that month. Right now, based on our current trend and projecting to the end of this month, we're right around 993. So there's quite a bit fewer properties hitting the market. And this is the time where, like I said, things start ramping up for the spring, summer season. Like May of last year, we had over 2,000 properties hit the market in Denver County. So we're way behind that right now. You know, before the start of COVID-19 and all the shelters in place back in February, I mean, we're down 53% from that. You know, if things are supposed to be ramping up, you know, we are definitely going down, which is to be expected. But another thing that's kind of weighing in on, you know, kind of the market are average days that properties are in the MLS before they go pending or under contract. I'm just going to kind of roll through January through April of this year. So January, the average days were 47. And then February, it went down to 40, and March 29. And currently, right now in April, we're at 22. So the shelf life on these available properties are dwindling because there's not a lot of options. New properties hit the market. Buyers, aggressive buyers who are ready to make a move now are jumping on things. Hence why we're getting the multiple offers, why we're seeing median sale price go up. So it's this combination of, you know, all these statistics that are kind of telling the story of buyer activity and what's going on out there right now. And then, so to put that in comparison, last year, this month, we had 36 days on the market was the average. So we're down quite a bit from year over year. So there's a lot of other folks that are kind of trying to see now that, hey, maybe there's an opportunity to jump in the market as a buyer and pull the trigger with less buyers out there. People that maybe a little bit more tech savvy, feel a little bit more comfortable with putting an offer sight unseen, and folks that are getting coached and understand Colorado contracts and how there's not a whole lot of risk associated until you get a little farther into the contract. So those folks are adding to the buyer demand right now. And now I'm going to jump into two more statistics: the number of sales, and those are the actual closed transactions, people that are changing keys over. Year over year, April from 19 to now, we're down 38%. And one thing I want to point out there, this is a trailing statistic. So just because it's you know, we're seeing the closings from contracts that went under in March when all this started. So we're down 38%, which is significant, but we're going to see it down even more once, you know, May comes along, and you know, the people that put things under contract and pending now from that actually close 30 to 40 days later. So that's one to keep an eye on, and we're probably not going to come out of that until all the shelters in place go away. I know the state has changed and they're starting to open things up. Denver County, different story. May 8th, this is a new date, they're saying. So it's going to vary county to county, municipality to municipality, on when that when we're going to start coming out of the number of sales. So that's an interesting one to kind of keep an eye on. And then housing inventory is the last thing I want to touch on. Currently, they're 2.9 months of inventory. And for those who are kind of wondering what inventory is all about, it's a pretty simple statistic. It's based on our consumption right now with the amount of inventory we have, active listings, if no new active listings hit the market when we'd run out. And so we basically have almost a little under 3 months of inventory on the books right now. We've been anywhere from 1.25 to, maybe upper ones for a while now. I literally had to dial back in our statistics to October of 2013 to find a higher inventory number than 2.9. It was in the threes prior to October 13. So we've been in, like I said, deep into a seller's market. Five's right around a balanced market where there's enough buyers, there's enough sellers to make the market work well, where there's not tons of multiple offers, and so that's where we'd like to see it. It rarely ends up there. It's usually one way or the other. So 2013, that's popped up because the buyer demand down 50%. So it's tanked since COVID, and I anticipate that to come up quickly. I'm probably jumping the gun a little bit here, but as far as inventory goes, it's going to be one to watch really closely, because all of a sudden, just because Denver and the state of Colorado say, oh, okay, it's safe, go out and buy stuff that you need to do, there's going to be a lot of people that are going to be a little bit more conservative in their approach, and they're not going to list homes right away. They may say, you know what, I'm going to put it on hold for 12 months. And I totally get that. That makes sense, with what's going on. But the buyers, that's a different story. These folks have been on the sideline. They wanted to buy. Maybe they couldn't buy because of shelter in place, or they just didn't feel comfortable. And so those folks, I think, are going to start jumping in quicker than we have new listings. So I think we're getting set up for that median sale price to shoot up as we get into the summer, unless something changes with our inventory and our active listings. So that's one statistic to really keep an eye on, especially if you're on the buy side, and if you're on the fence on selling. Ryan's going to get into some strategies that we're seeing and we're implementing out there to succeed, but I think there's opportunity there. So those are all the statistics I'm going to go into. Hopefully everybody's still awake. I know it can be a little boring if you're not used to the stats, but that's what drives real estate, period. So those are the numbers. And like I said, those are real data as of last night. We have a lot of more historical stats on our website and our blog. We do stats every month. We do some big yearly and quarterly reviews as well. So if you really want to geek out, have at it. So what does all this mean? What does it look like coming out of self-quarantine? We're kind of in this weird area right now. I mean, the state says yes, the city of Denver says no. What should we do? I mean, the key is obviously be safe, be conservative. But what I'm going to talk about is the buy side and the sell side. As of right now, I think we've had an internal conversation today. Nothing's really changed on, how we're approaching things. We still, on the buy side, it's not dead, but we just have to approach it differently. In-person showings aren't happening, and that's what sidelined the buyer demand. Now, once Denver lifts that stay-at-home order, anticipate the pending homes going up substantially. Like I mentioned a few seconds ago, the listings will probably gradually come up. I mean, I've looked last night as well for new listings this week compared to last, and we were averaging anywhere from 90 to 150 a day, and the withdrawals had started going down quite a bit. And this week on Tuesday, specifically when Governor Polis announced that they were easing the stay-at-home orders, listings jumped to like 250. Like, people were just like, woohoo, let's sell now. And it was like 250 and in the upper hundreds. And then it's kind of slowed down a little because Denver is changing their tune and not going along with it. So I think you're going to see a spike, and then it's going to kind of plateau. But I think the buyer demand is going to keep going up. So I think that's why we're set up for a very competitive spring and summer market. And it's going to get even more competitive with showing restrictions, not allowing overlapping showings, and access to homes and lots of stuff. So that being said, just a statistic I did grab. Last week, there's 684 new listings. This week, after the stay-at-home order was lifted with the state, we have 806. So that's trending up. If I'm a buyer, I'm starting now. Like if I want to buy in the next 3 months, 3 to 6 months, I'm going to start doing the work now. Because early birds really are getting the homes. No pun intended, but it's true. You want to select the broker you want to work with, interview them via Zoom. Some great questions to ask. How are you, Mr. or Mrs. or Miss Real Estate Broker, navigating the market these days? What are you doing to ensure my safety as a buyer and the safety of the sellers and the community, so we can succeed at that? And are they staying on top of the rules and regulations? Because you don't want to be stuck in a situation where you violated something and you get fined for being out because your real estate broker said, oh, it's fine, when in actuality it's not. Start with the pre-approval process. Mike's really good contact on that. Get pre-approved, get all your documents in, make 100% confident you can purchase, there's no surprises, your budget, and then start really perusing the online searches, the virtual tours. There's a ton of them out there now, and start talking to your broker and figuring out a strategy, because it's not one-stop shop. There's multiple approaches, and we got to figure out what works for you if you're thinking about buying. Another little bit of advice, I know Mike's not gonna want me to say this, but if you have cash and you can buy in cash, even though you don't want to, do it. It's gonna help you succeed. You can always talk to Mike or someone else afterwards and do a cash out refinance 6-12 months down the road. So there are other options to do that. I mean, for instance, in February, right when things were ramping up, I remember this was when the toilet paper was flying off the shelf and hand sanitizer was becoming scarce. There was a new listing in a central Denver area, single family home. And in 36 hours, there were 107 showings, 36 offers. It was nuts. My buyer at the time was financing it, and fortunately he was able to purchase cash, but we ended up on top only because he paid cash. So he will be doing a cash out refinance down the road. So there are options for that. If you're several months out, don't wait. Get started on the pre-approval process. Like I said, do all the things I just talked about. The only difference would be if you're looking 60 to 90 days plus, my recommendation would be start now, just because a lot of sellers are asking for a 30, 60-day rent back after the transaction closes, and you got to plan for that. So, and it's all about when you get the keys, when you get to move in, when possession. So be prepared to possibly have to offer that in your offer, and have a plan of, hey, where are you going to live so you're not homeless during that time period, because they need that to go find a home, because they're worried about not finding a home because the buyer side is really tough right now. And then just know it may take longer. You may not succeed in the first or second offer you submit because of the competition out there. Talk to your real estate broker. There are definitely ways where you can sweeten a deal without throwing a bunch of money at it. It's all about figuring out what the seller's looking for. So that's kind of the buyer outlook. I'm pretty confident things are going to heat up. So that's going to be our toughest point of the two. On the seller side, short term now, if you were listing in the last 30 days, it's going to be slower. There's going to be a lot less people through the home. It's going to take a little longer. Long term, once we all get out of the stay-at-home order, I think you're not going to have a real problem selling a home in a desired location that's priced well and it doesn't have any major defects, issues, mechanical, that kind of thing. It will go pretty quickly. So if you're prepping, now's a good time to talk about, hey, what should I do to my house to make sure we don't have those issues mechanically, and we can get it on the market looking good to get it sold fast. And also, the biggest thing to discuss is, how do we stay safe? How do we keep only people through that home that are qualified? Open houses, I wouldn't do them. I mean, personally, open houses, I would just write those off for the rest of the summer. I know a lot of people are probably going to start doing them when they're allowed to, but you just don't know who's going through your home. You don't know if they're pre-qualified. You don't know if they're just neighbors nosy. You just don't know. So my recommendation on the list side is make sure you have a plan, make sure everybody coming through the home has the ability to purchase that home and have been vetted a little bit more than we used to do prior to the pandemic. And then really tightening down your showing windows and minimizing the amount of time people are through the home before you get it under contract. And then as far as pricing goes, I think prices are going to go up. You're going to see median and home prices go up. They're going to continue to increase. We're seeing that now, which is kind of makes you scratch your head. But once you really look at the statistics, it does make sense. I think you're going to see that continue in the short term on prices, and then you're going to see somewhat of a, not a leveling off, but you're going to come back down to the 6, 7, 8% range once we get out of that initial demand, and once the listings start coming and that faucet is turned back on, and we get closer to our whatever our new normal is. But we're definitely going to be taking a really close look at this as we go, and we might do more webinars down the road, just as things are changing, to update you guys real time versus waiting a month and down the road when you're looking at data that doesn't make any sense right now. It's irrelevant. So that is a good transition into kind of our new best practices. What does that look like if you're buying and selling? And so I'm going to turn it over to Rhyan Diller now. Like Meredith mentioned, Ryan's been in the business a while. She just started with us at the worst time possible. So she's doing a great job. She's educating her clients, and she's helping us figure out what our new normal is. So Rhyan, take it away.
I know we're in such a fun time right now. So you kind of touched on a lot of it, Mark, but I think kind of going back to the buy side, as a buyer in this market, I definitely think it's really important to get in the mindset that you may go under contract on a home that you haven't seen yet. Now, all of the information that we're kind of getting is changing daily, so that may not end up being the case. But it's good to prepare yourself for that and know going in that you may just be seeing 3D tours, virtual tours, and sometimes maybe even just the photos prior to offering on a home. But knowing that what's kind of nice is that the Colorado contract is pretty buyer friendly. So if you do go under contract and decide that the home is not for you after you see it in person, then there are ways to back out of the contract without you losing a penny. And I would also say just on that too, just kind of prepare yourself and pay attention to the listing specs as well. So there's a lot of information that they put online when they put a home on the market. So you should know if it's a 2-story house, how many beds and baths. So know what you're kind of offering on before you go in, instead of finding out that it's a 3-bedroom and not a 4-bedroom after you go under contract. Let's see here. I think for sellers, there is some good news in that, kind of as Mark mentioned, that most of the buyers right now that actually are looking are pretty serious, because nobody wants to be out kind of just as a looky-loo and, wasting anyone's time and hopefully not spreading anything. So I do think as on the sell side, it's really good to have a game plan in place for two scenarios. One, if showings are allowed, and two, if showings are not allowed. And what we've been kind of seeing with that is if showings are allowed, no back-to-back showings, making sure that everybody walking through the house is wearing gloves and mask, hand sanitizing. Sometimes we're even seeing that just on one day and then having cleaners come through right after so that things can be sanitized again. And then I think either way, make sure that there's a plan in place for both. So if there are showings allowed and if there's not showings, make sure that your broker is advertising your home properly, really taking great photos, good virtual tours, getting it out to the public in more creative ways than we kind of previously had done.
Okay, so those are all good ones, Ryan. I think it's a good time to turn over to financing side. This is one important point. I'm gonna say one thing about this. In this market, one of the best things you can do now to prepare when you are ready is to put together your real estate team. And part of that team is the financing side and having someone who can work well together with whoever is representing you to purchase the home. Because at the end of the day, in a competitive environment, we are going to present you and we are selling you to the seller that we're going to get to the finish line. And that's super important these days. So without further ado, we'll turn over to Mike Oswald.
Thanks, Mark. I'm happy to be here. Welcome to everybody that's online with us. Yeah, it's an interesting times we live in. And so what I wanted to do was, I put together some thoughts as far as, how has getting pre-approved been affected by the quarantine, by the situation that we're all living in. And it really hasn't been affected. You can still get your, application in, get documentation done. It's all digital. It's all online or over the phone. And we can get you pre-approved really, really quickly. And so don't let that stop you. I mean, if what Mark is saying is so accurate and so relevant that, even if you're sitting on the sidelines just for a little while here, kind of waiting this out, as a lot of people are, which makes sense. But you know that once we kind of get back into normalcy, moving towards, getting back to work and getting out from the quarantine situation, that you want to, buy a home, start looking into that seriously. Go ahead and get things going now with your lender, and just, it's just as easy as it was before all of this, and it can be done in the same day. I mean, we have our loan officers are getting folks fully pre-approved and ready to go same day if they can get everything over to us, and everything again is completely secure and online and really safe and easy to do. And so no physical interaction needed on that. So that's good. And then what changes have come about as far as lending? Well, that's another topic. What's happened over the course of the last month or 6 weeks or so, with the unemployment rate being where it's at 20%. We've lost 26 million jobs in the country. There's been a lot of banking challenges, and obviously the government's doing what they're doing, and the stimulus, and everybody's aware of that. The lenders have really gotten tighter on their guidelines. So meaning that, it affects more of the lower credit score borrowers. And so the threshold of maybe being that lower tier credit score, they've raised it. So they really want you to have less debt, lower debt to income, more, some reserves in the bank after you close. So money in reserves left over that weren't part of the transaction, to show strength. And so with some uncertainty that's out there, there are some changes that have been put forth. What's interesting is there's a large bank, and there's some other ones too, that just announced they're no longer doing cash out refinances. And they're a big bank. I don't know if I can name a name on this, Mark, but it's not us, but it's a big one that everyone's heard of. So the reason I bring that up is it just shows that another example of banks really holding tight, really constricting or or raising the bar, as it were, as far as getting qualified, or the things that they'll do for lending. They're trying to be protective. I mean, what has happened, and I want to mention this, there's a lot of talk about the forbearance. And a lot of people have said, oh, it can forbearance starting April 1st, which is great. If you run into a financial situation and you need to go into forbearance, you can not make your mortgage payment. Well, that's part of what's caused the issue with the banks, is that causes a lot of stress on the banks. So the reason I bring that up is that it's important, even more so now, that if you're considering and you want to get positioned to, because the guidelines have changed. So maybe the last time you looked at this, pre-coronavirus, you fit maybe in those guidelines, and now because of the changes, it might affect your ability to get pre-approved, or your price point could be affected. So another reason to really, talk to a trusted lender right now, if you think that you're going to be getting back into this, shortly after this kind of starts to get normalized. As far as rates, rates are great. They're historically low. And that's pretty common news that's out there. So that's helping. The interest rates are low and are staying low, and there's really no indication that they're going to go up in the near future, especially as we kind of go through this. But what is something to consider is for future. So if you're going to sit on the sidelines for any extended period of time, there's a lot of talk and consensus out there that says that when we've got this debt that we are accumulating as a country and some different things that we've done, and for economic growth, believe it or not, higher interest rates actually help. It's kind of you think, oh no, interest rates help me. It does help the individual, but it can affect, it's harder to recover as economy without stimulus and some different things with lower interest rates. So there could be a movement on rates upward, probably 2021, something like, as soon as we're kind of through this and we start to try to get our feet back under us as an economy. So that's something to keep in mind if, based on when your timing is. Right now, the buying power with the interest rates is incredible as far as where they are. And so we just never know how long this is going to last. It's something that we're all having to, work together on, have a trusted realtor, a trusted lender, really be, diligent in getting your ducks in a row, making sure that you're, in position to move when you can, and I think Mark mentioned this. I think it's really going to be, it's going to take off quickly. Once we get back to work, we get back to some semblance of normalcy economically, I think we're going to recover pretty quickly. I think a lot of these guideline changes will go back to where they were, and it's going to be back to, closer back to where we were as far as the lending guidelines prior to this. As far as appraisals go, so speaking of, part of the process of buying a home, appraisers are appraising properties as we speak. They're going into properties, and they're also, if they don't want to go into properties for safety reasons or for any particular other reason, they can do an external appraisal and do some different things as far as some comparable sales analysis, and our lenders are accepting those. So they've made some concessions there to help in this market where we had a home that was in a particularly, it was considered more of a higher risk area in Colorado. And that was something that was a huge advantage for us, because the appraisal management company and the appraiser just felt like it wasn't safe to go into the homes, which is understandable. So there is, everybody's trying to work together on this, and the lenders are trying their best to accommodate the real estate market and the industry, because they know that people want to buy and sell homes, and appraising the homes is a big part of it. So that's really all I wanted to say. I mean, it's important that you just to close, it's important that you get, your ducks in a row, get your financing in place, especially with the changes that have come about. You want to make sure that you didn't fall out of that, things didn't change, and that it doesn't affect your ability to get financing when you are ready to get into the market. So make sure that you're, with a trusted realtor, like a group like Love Your Hood, and then they can direct you to a great lender as well. So I appreciate the time.
All right, thank you, Mike. We can move on to questions now. I see that we just have one in the Q&A. So, oh, there's more. If you have any questions, now is the time to type them in there, and I'll open this up to the three of you. Anyone can answer. Our first question is, you talk about fear in buying and selling. Do you think a high unemployment rate will feed the fear and increase inventory as well as reduce home prices?
That's a great question. I'm going to jump on that one. I was waiting for that. I saw it come in earlier. So to answer your question, kind of. I know that's not a yes or no. I want to kind of give a little lead in before I really give you my opinion. And again, it's my opinion. But Denver home prices, they're expensive. Everybody that's been watching them, you got to have pretty much almost $500,000 to buy a home here. And looking at what's happened, and again, I'm shooting from the hip here. I haven't had a chance to prepare, but I'm going to kind of nerd out and jump into this question later. I think most of the folks that are getting laid off at the moment, there are a lot of food service industry, retail, entry-level positions. There are probably some positions that are, higher earning type positions. So I think the majority of those folks are probably struggling with rent right now, unfortunately. This is one of my biggest beefs with the city. We could have to do a whole webinar series on it if I really got into it, but home affordability here is not great. And a lot of things need to be done on a state and city level to fix that. So if we were at a median sale price of $250, yes, it would definitely affect things. But close to 487,000. Unfortunately, I don't think so, because we remain a desirable place to live. I think once the stay-at-home has lifted, people start the moving process again, relocation process. I think industries
that much unless they.
Mark, we lost you for a minute. Could you mind repeating your last few points?
One second.
How's this now? Sorry, my earpods died. So it must be a sign to stop talking. But anyway, I think things are going to pick back up with the relocations and whatnot. So I'm not too worried about that. You might see a small drop in buyers, but there's still a lot of people that have been sitting on the sidelines that are ready to go. So.
Our next question is, Mark, you mentioned vetting buyers beyond just a pre-qual. What else can be done?
I got some ear issues. Hold on a second.
Can you read the second question?
All right. I think I got it back. Sorry about that. Can you guys hear me okay?
Yeah, can you hear me?
Yep. So what was the question again?
All right. It's the second on the Q&A, if you can read it. It says, Mark, you mentioned vetting buyers just beyond a pre-qualification. What else can be done?
So the pre-qualification is important. Historically, we've just kind of listed a property on the MLS and left it up to the buyer's agents to make the determination if they want to spend time investing in someone to show a home. And I'll be honest, a lot of times that's an opportunity to meet new buyers that you've connected via online or referral or whatnot. So I think the requirement needs to be that there is some sort of pre-qualification, pre-approval lender letter submitted so that we know that a person is serious, or proof of funds if they're a cash buyer. And then the listing agent's going to have to spend a little extra time and energy vetting folks to make sure things are good. You know, and then also setting appointments. In the past, you know, we've been very lenient with, you know, hey, I got a 2-hour window, I want to go see your house, and folks are out seeing half a dozen houses in an afternoon, and they get delayed and things change. I think we're going to have to be more intentional as buyers agents and be more respectful to sellers and committing to like 30, 45-minute windows of like, hey, I'm going to be in, I'm going to be out, so that we don't jam up, you know, having 4 showings a day versus maybe getting 8 or 9 as a listing agent and seller, to maximize the amount of time you get people through your house, because a lot of people are going to bring in cleaners after the day's showings and clean the house, disinfect it. So it gets expensive. So those are some things that on the list side to ensure that we're getting quality people through. Honestly, I've even, you know, through this COVID, listed a home and had a week where we accepted offers and never showed it and got 9 offers. And then after they submitted an offer, got them through the house and then started the negotiation process. So there's a lot of different ways to handle it. And I think it's a good conversation to have individually with your broker and your situation to figure out how we can achieve success in what you need.
Okay, our next question is from the chat, and it says, maybe similar to the first question, but it was my understanding, perhaps false, that a recession would cause more people to foreclose and sell more homes, therefore benefiting buyers, and other people losing their jobs and not being able to buy, therefore also benefiting buyers who haven't lost their jobs.
Do you want to, Mike, do you want to handle the refinance thing? And then I can handle the foreclosing part of it.
Are we looking at the chat question here? Am I on mute? Can you guys hear me?
I got you. Yeah, it's the, Meredith, can you read the question again?
Yeah, the first one in the chat. Maybe similar to the first question, but it was my understanding, perhaps false, that a recession would cause more people to foreclose and sell more homes, therefore benefiting buyers, and other people losing their jobs and not being able to buy, therefore also benefiting buyers who haven't lost their jobs.
Gotcha. Okay, I was reading the other one. Sorry about that. I think folks are not going to get, there's always exceptions to the rule. Let me clarify there. Foreclosures are probably not going to happen because most folks who bought 2+ years ago have an equity position in their home, and they're going to, I mean, they may be forced to sell, but I don't think you're going to see a lot of foreclosures unless, I'll probably tread on Mike here a little bit, unless interest rates change and start heading up and folks with, you know, adjustable rate mortgages, you know, and then, you know, the nice thing about Denver is I always tell people to have plan A, B, and C when you own property, especially when you're buying. And so looking at the market here in Denver, the rental market is still strong. Most likely if you had to make a move out of state, probably 7 out of 10 times, you should be able to cover your mortgage with a renter or tenant in there, if that's an option. Or you sell it, you know, you have options there. So that would kind of be my advice on that if you're in that position. But I don't think we're going to see a big wave of foreclosures because the lending world's stable. They've been doing a great job since 2008, making sure people that actually can afford to pay the mortgages buy homes. So I think our lending's been pretty strong, and I'll let Mike talk about that a little bit more maybe.
Yeah, I can piggyback on that, Mark. Absolutely. I mean, so I compare this to what happened in 2008, 2009, when we really had that big, huge drop in value. The loans that were being financed weren't nearly, I mean, there was not a lot of qualifying, frankly, that happened. And so when you had any type of income challenge, people already were in loans that were, they necessarily didn't typically qualify for as strongly as they do now. And so it really didn't give them any flexibility or any ability to withstand a hiccup in, a pause in income or anything like that. Like today, where, like Mark said, the loan lending has been on the other side of the spectrum as far as, more challenging. You have to qualify with income, show sufficient credit, all the cash that you had to put money down, which is another thing you didn't have to do before. And so there's been a lot of changes there that have really solidified the banking industry, but also the ability for buyers who own homeowners to have the ability to maybe withstand a little bit of income pause like we're experiencing right now, whether it's a spouse losing a job or reduction in hours or being furloughed and that type of thing. So I agree with Mark. I don't think there's going to be a big wave of foreclosures coupled with the equity growth, the equity that we've been experiencing year after year in just about every market sector in the metropolitan area, really. So we should be okay there.
All right, I'll move on to another question we got in our Q&A. It says, I was going to sell this year, but I'm now thinking we'll wait for 1 or 2 years or so. Should I look into refinancing to take advantage of the lower rates?
I'll take that one. Yeah, I mean, refinancing is, if you're not going to sell and you want to stay, you should definitely take advantage of the lower rates if it's a benefit to you. It depends on, I would need more information to really give you an accurate answer other than a general question or an answer to your question of just, if you have an interest rate that's above where they are currently now, you should take a look at it. It doesn't cost anything to take a look at it. And if you, for instance, if my loan officers, if you would send in just your mortgage statement, we could do a quick, just a quick analysis and show you what you could put your rate to and what benefit you could get as far as saving monthly. And then the question is return on your investment, because there's costs associated with refinancing typically. So you just want to weigh that out, like if you'll be in the house long enough to recoup your money, your costs, depending upon how much you save per month versus how much it does cost you to refinance. Versus if you are considering selling in the 1 or 2 year window, you want to just analyze all of that. And then cash out is always an option as well. If a lot of people are taking advantage of that to pay off any debt that they have. So it kind of streamlines their monthly expenses, really makes it a little more affordable, especially in situations where, maybe they have had a reduction in income or that threat might be there. You could just, take advantage of your home's equity to get rid of maybe some higher payments or some higher interest debt that you might be carrying. So there's some things definitely to consider.
I got a quick question for Mike.
Sure.
John knows this is coming. I've heard a lot and seen a lot on TV. A lot of these bigger banks and jumbo loans. Can you talk to the folks and just kind of let them know what's going on in the jumbo world and how things have changed a little there? Absolutely.
That's a great. I'm glad you brought that up. So the jumbo market is really tightened up. Typically, you could go and get your financing at a broker or a local bank that sells your loan, or you can go directly to the bigger, the big banks like a Wells Fargo or a Chase or US Bank. And right now, the jumbo market is somewhat non-existent in the non-direct lender, the big bank world. So working with a local broker or a local kind of correspondent lender that would sells your loan off after closing, there's really not a lot of jumbo financing right now. That money has really been put on pause. And then really the options are to go to those bigger banks that carry that mortgage debt. And I'm talking like the bigger banks. But then again, I just referenced one of those where they're not doing cash out right now, and one of those bigger banks. And again, it's an interesting situation. So the jumbo market is one of the most affected markets right now as far as financing goes, as far as really limited. Now, where's the solution there? So we have had folks buying or even refinancing that are in the jumbo market on loan size. But what we've been able to do is break it up into 2 loans. So we could do a first loan and then a second loan. And then the first loan is not in the jumbo size, and it's in the conforming loan size. And then the second just completes the rest of the loan requirement. And then we'd be able to get them really great rates, because now it's a conforming loan and it falls into the rates that are really low right now. So there are some solutions there for folks looking for jumbo financing.
Just so everybody knows, when you throw out conforming, I know what you mean, but what's that price point, in Denver? And it does change, we know, from area to area. Where are we at right now with conforming versus jumbo ballpark?
Anything over 561 or 575 Metro Denver, and then it gets into 575. Then it gets into higher balance, like Boulder County is a little bit higher, and then some surrounding counties are less than that, like Larimer County, El Paso County. So yeah, so anything. If you're in that market of purchase price of 650 or above, 700, you're going to probably find, unless you've got a large down payment, you're going to find yourself flirting with that jumbo loan limit. And that's where we could come in to say, okay, we can bridge the gap of getting a second to adjust. Make sense?
Totally. I think that's a great thing. My statistics, I'm talking broad across the board. When you do get into the higher dollar homes to sell and to buy, it is going to slow down. And historically, it always has, because the number of buyers that are out there to purchase those homes is a lot smaller than under, say, 700,000. So, you definitely want to have conversations and dive into those specific statistics if you're in that category in situation. So, okay, I got one more question. I'm gonna put Ryan on the spot, and then we're gonna probably land the plane, because I want to be respectful and keep it under an hour. So, Ryan, if I am a buyer and I'm concerned about buying a home virtually, sight unseen, but I really love this home, what kind of advice would you give me in that to kind of quelch my worries about it?
I think for starters, knowing that once you go under contract on a home, everything after that point is considered essential at this time. So you can still do the inspection, do the appraisal, close. And what is nice is the Colorado contract is pretty buyer friendly. So we can go under contract on a home, you can see it the very next day, and if you decide it's not for you, you can get out of that contract and kind of walk away no different. So that would be my advice. I know it's a hard mindset to get into for people to want to put an offer in on a house sight unseen. But I think just knowing that there are ways to get out of those contracts, and there's additional language that we're seeing people put into contracts with that, saying that we haven't seen this home yet, here's the offer. If we don't like it, we want to get out of it. Oh, I think I lost you, Mark.
Yeah, no worries. That was great. Sorry, we did have one more question, I think. Meredith, you want to read that one? I see it. Somebody put it on the chat.
Yeah. Our last one is, are you noticing more homes coming back onto the market, like contracts falling through, etc.? And do you see people listening for more reasonable prices rather than listing high, since sellers may want to move their properties quickly?
I think that's a good question. I think you're seeing a lot of stuff that was pending before we went into self-quarantine. Maybe they had a contract that fell apart with the inspection or, whatever reason, and they just decided not to relist, and then they're coming back on the market. I think a lot of folks are like, price is a moving target in a fast-paced market. And, when I'm counseling sellers, I don't want to overprice. Obviously, that's the worst thing you can do. I want to come in at a price that's, maybe a little bit below list price, so we can capture as many people as we can. I think some people are willing to maybe take a little less, a little earlier, to avoid having to be exposed to a bunch of people showing their homes, and they're willing to trade some profits for security, knowing that, hey, we're going to get this done, maybe a little less than what I wanted, but then I don't have to suffer through, 30, 45 days of showings. So, I think it's going to be up to, relying on your real estate broker to tell you kind of, hey, how's this house? Where does it wind up on that spectrum? Is it overpriced, underpriced? Will it sell quickly? Most of the time we can look at it and say, yes, no, that house will be there for a while. We don't always get it right, but, some of our past experience and history will help out with that question. I don't know if Ryan has anything to add, but that's kind of my 2 cents.
Yeah, just picking back on that a little bit, I do think when this first started, we definitely saw a lot more contracts fall through, just because I think that was when everybody found out that their jobs were impacted or their income might be impacted. I know I talked to a few other agents and title companies that said they were seeing a lot of contracts that had to terminate because buyers lost their jobs or their income. I think for the most part, it's, from what I'm seeing, at least, sitting a little bit in the sense that I think the people who are out looking are the ones who know they maybe aren't affected or won't be affected during this.
Great. Well, I went a minute over, so thanks for suffering that last minute. But last thing to sign off, send Meredith an email, meredith@loveyourhood.com. We'll get you the kind of the outline with some of the stats, and feel free to, and we'll have everybody's info on here. Feel free to reach out to us with questions, comments. We'd be happy to connect and help you out. So we will have the video recording up if you really want to suffer through this again. So thanks, everybody. I appreciate Mike being here, and Ryan and Meredith for their time. And I hope everybody stays safe, and hope to see you soon.
Thank you, Mark. Thank you, Meredith. Thank you, Ryan.
Thanks, everyone.